Hi, everybody. Brock, Kevin, Hugo. How's everyone doing? Hi, Irina. It's a nice day. Any day you're breathing in and out, it's a nice day. Hi, TJ. Anytime you're looking down at the grass instead of being underneath it. Yes, in a militarized capital. Okay, so turnaround Tuesday, everyone. Hi, Jeff. Nice to meet you. Gold looks incomplete to me. I think there's another shot down here for a 3. Silver looks the same. Less beta in gold than silver. So, unless silver could clear 25.50 and then we could get some more upside. So taking a small short, I'll take partial profit short from 40. And part of the reason for this is also strength in the yen. You know, the yen backed off from this 104 level, but so far just consolidation. And yesterday, the S&Ps got back above the breakdown with no problem, right? So, I mean, this happened with the markets closed, or maybe it was yesterday afternoon, but now it looks like we could make a run for new highs. A lot of the people I interviewed, Peter Campbell talking 38.50 late January, February 38.50 is viable in my opinion. Now, as long as we stay back above this pivot. So, I mean, this is your pivot here around 382 to 4. It's not a solid support zone. No support or resistance zones are. They're more like instead of concrete, like a mattress, kind of a range. Hello, Monica. So, Japanese yen. If we get a breakout over 104, that's not going to be constructive. Precious metals. So we'll see what's happening here. And yields have pulled back a little, but I don't know. They look bad. I mean, they look even better than the yen. So, you know, we got up here to this 120 level. It's possible that we could pull back to 1. You know, that's going to be, this was a big breakout. So this is, you know, I still think the yen is correlating with this, maybe not 100%, but 80%, 70%. And then we have this pop happening in oil. And, you know, could this have just been, you know, A, B, C, and we're going to make another run? Oil looking much weaker than the stock indexes, right? And, you know, it's possible if I look at NASDAQ to, you know, have a descending triangle, but felt better about a precious metal short than selling this rally in indexes. The other thing that I'm waiting for, and with the dollar down, really hasn't given up that much ground, is USD Canada. So, you know, so far we've held this 38% level. You know, next time through this high, I think we're going to 130. Blake talked about that yesterday. But, you know, there's still a chance we could do 61.8 back here. So, haven't done anything there. We'll see if the dollar has a little more follow through to the downside. And Euro pound's trying to pop here. It's a nice little base. I don't know if I should be, you know, getting real bullish, but, you know, it's back there from the breakdown. It's challenging. It could probably be lightly long, looking for maybe the moving average confluence coming in there up around 89, 90-ish. Everyone see that? And what else is there to cover? You know, I still think that this euro is still a sell as long as we stay under 122, and that the dollar is not a short, but this is, I think, corrective. in the dollar. I don't think this is the end of the rally, and we're going to 88.5. I'd be looking for a higher low on this pullback. It's probably not today, but I'd be looking for that. Any questions on anything I've covered? You know, you guys are running out of time to pick up this offer here. Okay. So that, and face is not going to be as detailed. Oh yeah, good, Jeff. Well, I'm not short. I haven't shorted it yet. I was short last week, covered 20.5 is possible. I actually think there's going to be a chance to buy it, you know, long term, around 116, but that would be translating if we get that rally in the Dixie to 95.5. Does that help you, Hugo? Hope so. Okay, so you guys, okay, you're very welcome. Okay, so you guys want to have this dashboard waiting for you at your fingertips. You know, there've been a couple of changes. You know, Greg is short-term negative now on euro, neutral on cable. So, you know, there are some things that are changing here. You know, the dollar's been in a steady downtrend for quite some time down, and Yellen's going to be talking today. So, you know, someone released a pretext for Yellen. I think this is what they're saying. I can't find it now. Okay. So she's going to be talking about, you know, they're not going to seek competitive advantage by debasing the dollar. So you could take that. Yeah, that's it. Yeah, TJ did it. Okay. Thank you, TJ. Yes. Okay. Rates to be low, stay low, never thinking about raising them while the 10-year went from 0.5% to 131 or so. And we will not seek a weaker dollar. We probably don't have to seek it. We're not covering, yeah, I don't know if we're going to have to seek a weaker dollar. So anyway, that's my take on what's happening here today. And invest in your trading career and sign up and surround yourself with great traders in members chat. And with that being said, I'm going to bring Blake in. How are you, buddy?
Hey, good morning, Dale.
Good morning, Blake.
So we have Janet Yellen. I think you had talked about Janet Yellen, her confirmation today.
Yeah.
And that's going to be a big deal. You know, a lot of people I think what we're going to hear is, first and foremost, is we're going to hear that you know, Janet Yellen's going to continue to follow the mantra of supporting a stronger dollar. I mean, remember, it's different role that you play as Treasury Secretary versus, you know, head of the Fed.
You know what I hope for Janet Yellen, Blake?
What's that?
Is that when she was Fed chairman, I hope that I don't start seeing on Twitter Janet Yellen with a beard like the Quaker Oats box.
Oh,
that's what.
you know,
remember
like
those?
Ben Bernanke?
Yeah. Oh, yeah. They put it. Yeah. Oh, maybe it
Ben
was Ben Bernanke, but yeah, they put a beard on her when she was Fed chairman. So I hope there's more respect.
You know, I agree. Look, she's I mean, although wouldn't she be a great grandma? Like to have?
Yeah, I'd love her to cook me a nice dinner.
She looks like the perfect grandma.
Yeah.
But no, you know, jokes aside, I mean, she's got a job to do, and her job as Treasury Secretary will be to, basically make sure that the dollar stays competitive and strong is what a Treasury Secretary should do, and probably what she will be looking to do. So it's going to be interesting to see what she says during her confirmation hearing. I think she will have a speech, but more importantly, it's going to be the questions that are thrown out at her throughout the hearing. You know what I'm saying? So
Yeah.
that's going to be really important in how she responds, because, like I said, it is a different role, and how is she going to deal with the transition and work as a Treasury Secretary? A lot of dollar bears have been just absolutely creaming their pants, knowing that you got Jay Powell at the Fed, Janet Yellen at the helm of the or the Treasury Secretary, and they just assume that the dollar is just going to get absolutely creamed with these two heading up those two organizations. And if she shows otherwise, I mean, we could see a dollar bounce. And so that's something that I think we need to pay attention to today, obviously. But that's the big thing that's happening today. So the confirmation hearing starts at 10 a.m. Eastern. So for those of you that don't know, that's in like 2 hours time, less than 2 hours time. So we got that. Also, we have a bit of a pullback in the dollar. You can see the dollar, like the euro dollar, has rallied. We are actually pushing up against previous support, should act as current resistance. One of the things about and I guess I should pull up the bias chart right now. One of the things that you guys might have missed overnight is the European data actually was pretty good, especially the German data. Here, let me pull up the calendar so you can see some of the data that came out overnight. You see the German current account came in a little bit better. The ZEW numbers came in a little bit better. There was some Italian numbers that came in better than expected, but you can see that better data that was released overnight has helped sentiment in the euro. And the euro is actually, it's not just the euro dollar. The euro dollar is broken higher, but you can see the euro crosses have moved higher. I actually had a short euro sterling in from late last week as we were trading around the 89 pence level, and I got stopped out. I had a really tight stop. I was just trying to be cutesy and play below this trend line, but I got stopped out of that. But I'm also long some of these crosses. Some of you guys know that I'm long like Euro New Zealand, Euro Aussie. I've got a smaller position here, but I am playing these Euro crosses on the long side because I believe they will move up for a couple different reasons. One of them being, more of a risk off type of hedge, because I do think that Europe or the euro is going to outperform. And so, to have euro longs against some of these commodity currencies made more sense to me, rather than putting the dollar into the equation, especially when the dollar is trying to base right now, and it is basing against a lot of different currencies. But anyway, so I'm playing, these crosses. I've been long the euro New Zealand since down here at 68 and change. So, and for those of you that don't know this, there was a big 127% extension confluence, 227% extensions. One of this move, one of this move, that all came in at 168.50. And so I've been long ever since that confluence. So, one of the things that if you're part of the ForexAnalytix family, you've known that in recent days. So anyway, that's what I'm doing there. Let's go into the charts and kind of nail down everything in the bias chart. and get you guys prepared for today, because like I said, today is going to be more about the dollar and what the dollar's, doing against, everything. Obviously we got, the dollar has pulled back. We've seen it pull back against some of these commodity currencies. So let's see how far they can go. The euro dollar, we should find some resistance this morning at 121.60. Remember, we do have an AB equals CD completion that'll take us down to 120. I still think that the euro dollar is heavy, but what we did do is we held that horizontal support. You can see that horizontal support at 120.50. So that is obviously support for today. Whoops, 120.50, yeah. Resistance 121.60, I think, should offer us resistance today. We are in a range. You guys know I'm bullish. I'm just not bullish right now. Okay. I'm looking for longs down at the 120 and 119 level. Hopefully we get down there. We may never even see those levels. That's just where I want to be bullish. I do think we are in a range right now. And so that's good, because there's a lot of two-way action now in currencies, and that's a good thing. The cable. So the cable, holding above the 135 level, you notice in the pound, we are making higher lows. Now we are making consistent highs. You can argue right now that we have some sort of wedge developing in the pound, but just keep that in mind when you're trading, the sterling. Okay. I think dips today probably can be contained by 135.50. Resistance, 136.40. They're not great levels, because I do think we are range bound. So there's nothing right. I'm more concerned with this support here at 135. That's more important to me from a longer term perspective, as you can see right over here. And guys, just so I'm just going to reiterate what Dale said. The bias chart, I'm going to be doing the bias chart with ForexAnalytix subscribers only after February 1st, because it gives me time to go back and show you why the 135 level is so important. I just don't have enough time to do that every day on all these different currencies, because we've got to get on with our trading session. So and we have interviews with Dale's guests and whatnot. So I'll be doing that with ForexAnalytix subscribers, the bias chart, going in a little further detail on a daily basis. All right, and answering questions. Let's go into the Aussie. So here's the Aussie resistance. Now, let's remove that for a second. We had this false breakout above this channel, which is the throwover. We had another false breakout here. We held channel support. So channel support is going to be really important. This is huge, because if we break below this channel, it is going to be really quite bearish for the Aussie dollar. Okay. This is where you start getting conviction, type of trades, when the Aussie breaks below here, because once it breaks below there, that's probably more a sign of risk off than anything. And then you start looking at what copper's doing, and, gold's, already trading weak, but that support is going to come in at 76.75. Resistance is going to be 77.30. Hold on really quick. 77.30, and then actually, yeah, and this is all previous support over here. So I think you just got to pay attention to the Aussie at these levels. We're probably pretty close to breaking one direction or the other. Probably has more to do with what happens with risk appetite and risk aversion at this moment. Stocks are strong. They're stronger than I thought they'd be at this point. Going into the inauguration, the risks of some civil unrest, Janet Yellen's confirmation, ECB on Thursday. There's a lot of things that are brewing here. I'm surprised equities are as strong as they are. Kiwi, head and shoulder
I've been
pattern.
surprised for a decade.
Yeah, right. Me too. Yeah, me too. That's true. I think the biggest shocker was this year and how big of a bazooka the Fed shot at this last year. How big of a bazooka the Fed shot.
Yeah, from that low in March.
I mean, we were down at what, 2,200 or 2,100 in the
21. And and we saw the turn, but I was just looking for fib retracements off a crash.
Yeah,
like that.
I was like,
all-time highs.
We'll bounce here. We'll probably see 2,600, 2,700 again. I did not think we would be screaming it back to all-time highs. That's just shows you the power of the Fed. 7,150 is resistance. By the way, the Kiwi is bearish. We have a head and shoulder pattern. Support 71 cents, then 70.50. Near term bearish, longer term obviously bullish. We're just near term, looking for a move back down to 70 cents. Dollar Canadian. So the dollar Canadian, and by the way, you guys know about the some of the permits for the we're going to be tossed for the Keystone Pipeline. Most of the analysts that I have read yesterday, like their take on it is more, medium to long-term bearish, the Canadian dollar. Near term, they didn't feel it was going to affect it so much. So, maybe that's why we came off a little bit, but I'm still looking at double bottom, breakout above 128.30. That's obviously something we talked about yesterday, but that's more of what I'm looking at. And I think, Dale, you mentioned it, and I'll agree. A 618 retracement back here at 126.91. So 126.90 should offer support. 128.30, that's key resistance. I'm going to put an asterisk there. We are range bound right now. Dollar Swiss. So we actually could be, and this is one of the things you guys should be looking at too. And you guys know I try not to trade the Swissy too much. It's just, it's too manipulated for me. But whoops. We might be developing a little inverted head and shoulder pattern here. Just think about that. For today, support's 88.50, resistance is 89.25, but dollar yen once again. 104.40, 103.50. Numbers haven't changed. All right. Dollar index. Here we go. So the dollar index, we broke yesterday out of this triangle. You can see now we're like retesting the triangles. This is like retesting the breakout point, if you will. Personally, I just think the dollar's building a base here. And in today's current situation with stocks where they're at, the dollar is performing quite well. And that's something that you guys have to really pay attention to, because the dollar is hanging on really well despite the risk on environment. So if we do see some risk off for whatever reason, let's just, let's call it, social unrest. Let's say a couple of the state capitals come under assault in the next 24 to 48 hours. If you think that that's not possible, well, I think you're wrong, considering what we saw. And you might say, oh, well, everybody's so well armed. Well, I could argue that our civilians are more well equipped than the military, especially
because they've been militarized, doing tours in Iraq and Afghanistan for the last 20 years.
Yeah, hey, look, yeah, and that's true. I have more ammunition in my house than a squad of Marines carries on a live patrol.
Wow, you're ready.
Well, I take 13 Marines squad, which I used to lead.
Yeah.
And I think about all the rounds that we'd carry. I got more ammunition than that in my house. So I mean, and like you're talking National Guards. Yeah. You're talking National Guards. So I would argue that that our civilians are better. If we really wanted to go after like the Capitol building, it could happen. It's not unrealistic to believe. So anyway, that's why I'm saying that if things like that started to happen in the US at different places, which is scary to think about, but if it did, the dollar would strengthen. And I know you might say, well, why would the dollar strengthen? Who would want to own the dollar? The dollar, remember, is that when it all, at worst case or at the the dollar is the ultimate safe haven vehicle because of the liquidity. It's not because of the fundamentals of the US. That's why the dollar is being sold and has been over the last couple of years, if you will. I think it's more of a product of deteriorating economic data and competitiveness, but during periods of stress the dollar will flare up and strengthen. So just something to think about. So support for the dollar right now is around 90 and a quarter, right? Resistance is going to be 91. Everybody asks, like, why do I have so much ammunition? Because I like to go shooting. It's fun. It's fun. It's a very expensive hobby. Do you know that, Dale? Especially right now.
Yeah.
Yeah. I mean, it's like, but I always like to keep my skill set sharpened. So I do a lot of, and I do this out in the desert because it's much easier to do it in the desert than, in a range. Yeah, we have outdoor ranges, but you have to adhere to certain rules, and I don't like that, based on my prior military experience. So I do a lot of like urban warfare type of training out in the desert, and then I do a lot of speed trials. So when you're doing that, I can burn through a lot of ammunition quickly. So
I burn through ammunition in the markets.
You should stop. You should slow things down there. S&P. So the S&P, we hit the 50% retracement basically yesterday, and then we bounced back. But I still think the breach of that 38% retracement is going to keep some downside pressure in equities. So I think resistance today, we're in an upward sloping channel. I'd rather be long down here. I'd rather be long down here than long at these levels. You guys know that. I want to be a buyer down at 36.50, not where we're at. I think today, 37.50 to 37.50 to 38.20 should probably be the range. Dollar Mexican peso trading really heavy today. I really think there's a lot of order flow that has been going through the dollar Mexican peso the last couple of days. If you were in the daily roundup webinar, Okay. You knew this yesterday. I want you to guys, and I'm going to share it with you today. Look at the hours here. 1,600 hours. 1,600 hours. 1,600 hours. 1,600 hours. Do you guys see that? See what happens right around every day around this time of the day? For the last several sessions, you would just get some, it's order flow related. One of the things about the dollar Mexican peso, if you guys don't know this, it is very much flow driven. Obviously, it could be driven at a moment's notice based on economic data or, risk on or risk off. But I think there's been some serious order flow going through at these times. And what's interesting about right now is you're seeing the selling come in way early today in European trade, which makes me believe that this order flow might be actually over. So be careful being short today. And I mean, it could break down. Obviously, we can hit, the 1,600 hour mark, which is near right now, like this time of the day. And we could break down if the order flow is still there. But the behavior's changed a little bit today. So just keep that in mind. All right. Support 1860. Resistance today is going to be at, probably back at 1990. So, and again, if you are a ForexAnalytix subscriber, you heard that yesterday on the daily roundup, which is exclusive to ForexAnalytix subscribers. You could have the light version of ForexAnalytix. You could have the light version at $19 a month, or you could be, a premium subscriber and you can listen to all those webinars. There are exclusive ones for ForexAnalytix subscribers. Let's go over to the Norwegian krona. Matter of fact, here's another conversation piece that we had yesterday. We were trading at, 860 or whatever. And Catherine from our chat room is like, hey, I'm short some US dollar Norwegian krona. I'm like, that's great, because you know where your risk is. The risk is right here. If you break above 865, it will break out. It will start to squeeze. But while we're below that, there's no reason to be bullish. And she stayed short. She told us in the chat room today, she stayed short. But we are approaching support down here. This is going to be the previous channel's breakout point, if you will. So that'll be at 850. It's still bearish. Proved it yesterday. And 864 is resistance, and that's mega resistance. That turns us back to range. May even turn us bullish near term. Gold's still trading heavy, but I think it's 1820 to where oh, there it is. 1820, 1860. I know we spiked below there yesterday, but it hasn't produced any type of real squeeze either. So that was just lack of liquidity move. 1860. Okay, range. All right. That's it. Bias chart is finished. Stelios, Steve, good morning, gentlemen.
Good morning, everybody.
Mark just asked, hey, I'm thinking about joining. How many in the chat room on an average day? There are probably 60 to 100 of us on an average day. From the European session to the North American session. So right now, there are 86 of us online. Okay. And this is just give you an example from when I got out. Good morning, everyone. Okay, 4:28 a.m. my time, which it now is exactly 2 hours later, 2 hours and 5 minutes.
There's a nice testimonial from Didier. Quite a few all day long, but mostly from early U.S. hours till close. I'd say 60 to 80. I joined several months ago and no regrets.
Thank you, Didier.
So there you go. So that's our community, guys. If you want to, and it's been actually kind of slow. Yesterday we were all messing around because it was so slow yesterday. I mean, I think people started sharing recipes, and it was like, I mean, hey, look, it's a community, and when things are slow in the summertime, we talk about like Netflix movies. I mean, you get people, talk. We just try to keep politics out of the chat rooms, and we try to keep, unless it's about Greek politicians. And then
we try to keep Steve out of the chat room, basically.
We try to keep Steve out of the chat room. We
Not
try
my
not
mom,
to talk
though.
religion, either. Because,
Yeah.
So anyway, and everybody's very respectful. And if you're disrespectful, I'll be the first person to kick you out, and I don't care. I mean, because I want a good community for our traders. If you're going to be a bad apple, I'll just remove you, and that's it. So anyway, that's it, guys. It is. Remember, we have a possible busy day today. What's your take on Janet Yellen here? What any thoughts?
Well, for me, she's a known quantity. She remember, she was Fed chair from 2014 to 2018, so it was theoretically a time when the economy was growing, and it was after the global financial crisis and before COVID. It was theoretically a good time, and yet she was, the Fed was quite aggressive at that time with continuing everything they tried. We had the taper tantrum, but apart from that, it was. I think everybody knows what she's like, and she is a dove, clearly, and. I don't think she's going to.
Dove.
Yeah, she's not going to spring any surprises, I don't think. But I don't know what you think, Steve.
Yeah, we know that she's an Uber dove. I remind you that she just hiked once. I don't count the second hike because she actually did it after Trump was elected and the market was now in kind of a mania. But while she was actually active, she hiked once and then. She waited, and theoretically speaking, as you said, because we all know that the underlying truth is very, very different. She had all the excuses to normalize or somewhat normalize monetary policy, which she didn't. So she's the perfect pick for the Treasury because we know that the Federal Reserve doesn't have a mind of its own. It should have, but it doesn't. So both what the government wants and what the Fed will deliver is exactly what Yellen will make sure happens as Secretary of the Treasury.
Well, it's going to be interesting to hear what she has to say about the dollar, being that she was so dovish during her tenure as the Fed chair.
She will read from the playbook, like they all do. They all say the same thing. We want a strong dollar, but something. What you say and what you do are two different things. And personally, and I think that's the example that everybody should follow. I tend to judge people and institutions from what they actually do and not what they actually say. So she might say that she wants a strong dollar, but what are the exact policies that the Treasury or the Fed under her or following her have followed to show that they actually want a strong dollar?
And Trade Journal said the pretext is that, that's been out since yesterday. Remember, it's a hearing. So she's going to have to answer a lot of tough questions, and people will, say, well, as Fed chair, you did this, and this. So what makes us think that you're going to do this, then this, and this? So it is going to be an interesting hearing. So therefore I won't be folding laundry during this hearing. I'm actually Yeah. Anyway, guys, I want to say thank you all for your support. But remember, if you want to try to get ForexAnalytix for free, and you live outside of the U.S., go to the ForexAnalytix sponsored page, and you can listen to what this is Chris Weston. You know, obviously we are all at home and COVID little quick interviews here, but you have to use this link right here to link the accounts and open your new account. And this way you can get ForexAnalytix up to 4 months for free. So it's definitely worth exploring. Make sure you check them out. And just so you all know, I'm also going to be doing a special for ForexAnalytix subscribers with Chris Weston, talking about the rise in yields and the yield curve and what that means to us as traders. That will be emailed out to ForexAnalytix subscribers in about a week and a half. So it's scheduling a time to do something with him, since he's in Melbourne, Australia, and I'm here obviously in the United States. So it's just connecting. It was difficult.
Yeah, time difference is a little bit brutal.
Yeah, it is. Anyway, guys, have a great one. Thank you so much for being with me today. Stick around because Dale's got such a great. You got Jay Lyons Fund Management today, right?
Yeah, Dana's great.
Yeah, so you got her, and then
no, it's him.
You got him, her.
It's all right. Dana Andrews was a very famous movie star.
Oh, Dana, not Diana. Somebody. We typed Diana.
Did you? Oh my God.
So somebody's got to fix that.
All right. Well, he'll still show up.
Yeah, of course.
He's a great guy. He's a great guy.
Anyway, have a great interview, and you guys stick around with Steve and Stelios. I'll let you guys go. Bye.
Thank you,
Blake. Good luck today. Hello, guys.
Hello, coach.
Hey, Dale.
My favorite coach. And my least favorite Greek. Hello, how are you doing?
Oh my God. That's said with love.
So Janet Yellen, yes. So she's going to have probably some leeway to say different things than what she was saying when she was Fed chair. But like you said very correctly, Steve, the question is, what does she actually do? But we wait to see. Interestingly, I've had the conversation with friends and other traders and about the dollar, about fiat currencies, and my view remains. I think the dollar, the general direction should be lower. I think we're ripe for a spike, but the general direction should be lower. And the way the U.S. is running huge deficits, they have to inflate their debt away. They just have to. And I was reading Paul Krugman, the Nobel laureate.
Oh yeah, the real liberal guy.
He tweeted today, and I was reading it, and I just couldn't believe it. He tweeted and says, I'm getting anxious mail from people who worry about the U.S. debt and how America will pay it down. And he goes, you don't have to worry. You don't have to pay it down. And he wrote, here's what happened after World War II. They never repaid the debt. They just issued new debt as the old debt came due. But because of inflation, debt as a share of GDP declined steadily. So, by the 60s, the war debt was negligible in economic terms. And I'm like, okay, so your advice is don't worry. We just trash the currency. We inflate the debt.
Has anybody explained to this idiot, and sorry, but I'm going to use a word because I think there is nobody more clueless in economics than Krugman, honestly.
Didn't he win a Nobel Prize or something?
Which probably epitomizes that he's completely clueless. Has anybody explained to the guy? Yeah, has anybody explained to the guy that inflation hurts mostly medium and lower classes? Actually, rich people have assets, tangible assets, that the prices always adjust to inflation because they have intrinsic value. So the whole we're looking for inflation to inflate the debt away policy is the exact opposite of friendly to people, to the don't haves. You know what I mean?
Yeah, look at the last 3 decades, let's say. asset prices have gone through the roof. We all know that. And the average wage, well, what has it done? Especially since the global financial crisis, they're flat. Actually, they're down small, I think. So the gap between, the wealth gap is huge.
Of course it is.
So how are you helping the average person by doing this? We've said this here on Face over and over again. I just don't get it. I'm not a Nobel laureate. I'm not a globally known economist, but just my simple mind thinks of these things, and I just can't see I just can't see how it will help. But maybe somebody can help. I don't know.
It's nice if he could explain how can you inflate the debt away, and at the same time, because the only way to inflate is to devalue the currency.
Yeah.
But devaluing the currency immediately devalues, as you said, Stelio, wages and the income of anybody that's dependent on an income. On the other hand, as I said before, people that are really rich and they're diversified and they have a lot of assets, they're not going to be hurt.
Yeah.
So
the crazy thing is that initially they were doing this, but you had inflation. You had inflation, measured inflation, which then was passed on to savers. You would get some interest, all these liabilities.
Yeah, because the bond market, the bond market was still a market back then.
Exactly.
So in essence, when inflation was spiking, at least yields were spiking as well. So savers could get something in return.
And liabilities that government had, which were linked to inflation, were paid out. So at least you got that. But now they're managing to generate inflation without actually reporting it, which is they're just killing you every way they can, which is insane.
Yeah, exactly. And in more than one ways, in more than the direct ways. For example, people realize some of the effects of inflation. They don't understand some of the more subtle effects of inflation. One example is that increasing inflation increases taxation. Somebody's going to say, but how the hell is that the case? I'll explain how. By cripping the by in essence cripping down the taxable barriers, the taxable brackets. What I mean is the following. Let's say that you get taxed X percentage for $30,000, right? And after $30,000, you get taxed by another percentage, and after 50,000, another percentage. But what happens? You keep the brackets as they are, but inflation devalues money, and $30,000 in 1990s are not $30,000 in 2020, right? But the brackets haven't changed. So there is another way, for example, that inflation eats away your income by, in essence, effectively increasing your real taxes.
Absolutely. That's a very good point. A very good point. And it's things like that which you don't realize, or if you don't actually sit down and think about them, it's indirect or how should I say it, secret taxation that you don't realize that you're getting extra as things get inflated. Very very correct, actually, Steve. For once, you said something really useful.
Yes, it happens to me once per week.
Love you, bro.
Yeah, me too.
So what else? Today is Donald Trump's last day as president. Some people are going to love it, some people are going to hate it, but that's the truth. And we get Biden tomorrow in inauguration, which is going to be characterized by high security and everything else that goes with it. But let's hope
my assumption is that nothing is going to happen. I mean, nothing to write home about. Still,
yeah, I think so too. But nothing is ever 100% sure.
I think it's probably going to go smoothly.
Yes.
Yeah, they may have blown their wad short term. Plus, they had assistance that they no longer have. So anyway, but it's not the end, in my view, of the violence that's going to happen. You know that 70% of the Republicans believe that it was stolen, the election. That's a lot of people. Okay. So he got 75 million votes, I think. So it's like 50 million people, thinking that the new president is illegitimate. It doesn't really bode well for unity and tranquility.
Yeah, I will once again say, as I've said since the very beginning, for people that considered Trump a disease, or whichever president, or now consider Biden a disease, right?
Yeah.
Listen, they're just symptoms, and the whole brewing situation that you mentioned, in essence,
Wealth inequality.
yes, is also in essence a symptom of underlying problems that don't really so much have to do with Trump being the president, Biden being the president, Republicans having X opinions, Democrats having Y opinions.
Yeah.
So unless the underlying problems are addressed, which I don't see at all any intention in the political agenda, I think that whatever the reason is, there is always going to be something that will happen on occasion that will be bringing it on the surface, and every time it seems to be uglier.
And it's not just the U.S.; it's in Europe. It's a global thing. Unless you already have like a very fixed system like China, where they can really just clamp down on everything. So, I think that it's not just a U.S. problem. It's pretty global.
No, it is global. It is global.
Yeah.
In some countries less, in some countries more. So not many things have happened since yesterday, but a couple of them have caught my eyes having to do with the charts. One of them is the attempt of the Euro USD to produce a morning star formation. It's still early on the day, I know, so the daily candlestick is fresh and has a lot of hours ahead of it until it can actually formulate, and we know exactly what we have. But so far, we seem to be forming a morning star formation exactly on top of this confluence of supports. Here is the 38.2% fib, and this horizontal support resistance area. I had since before, and people that read the weekend analysis have seen this chart, I had already drawn this these potential outcomes for the pullback in the euro. One was to find support here at 120.60. The other one is to aim for a deeper correction towards the 61.8, or even perhaps this confluence of supports above 118. So early it is indeed, but this is something I'm watching at the moment, because I do think it might prove to be an important development. Similarly, the cable yesterday closed by paring back all of its losses, so in essence it closed unchanged. Today's follow through is not really that much, but definitely remains in this uptrend. The rejection was really nice, so the risk reward still remains attractive, to be short, especially now that we're getting an opportunity for a rebound. But as I've been saying all these days, I'm not yet convinced of a turn of risk assets, of the dollar. I'm not yet convinced, because if you remember, the key charts that we're looking are the S&P, which hasn't broken down yet, right? Copper, where is it? Probably, yeah, there it is. So copper, which hasn't broken down yet. So these are two charts that I'm looking for. We did see yesterday the Kiwi test support, and it's not decisively breaking lower. Aussie has broken lower from this channel that we were looking for, but look at this move so far. I mean, definitely doesn't have something that shows that we've really turned. I didn't even close half of my USD NOK position yesterday, and the reason being the 4-hour chart. Let me show you this one. So, here's another example of a commodity currency. Here's the USD NOK, and here's the rebound. So far, I see nothing that says impulsive here, right? Nothing. I mean, we did rebound higher a little bit. Yes, we did break through this. It is a wedge if you look at it on the 4-hour chart. It is a channel if you look at it on the daily chart. Here it is. We're back testing, by the way, this channel. So let's see. I mean, let's see if we can hold this support here on the 4-hour chart, which is more or less the channel's support in the daily chart, and we rebound from there. Okay, fine. But if not, if we break through here, here's USD CAD as well, by the way. I mean, did rebound, produced a lower low, is diverging, but hasn't produced a higher high yet, right? So this might be another consolidation. So basically, we have seen some moves that hint of a possible dollar reversal, but what I've been saying since last week, confirmation, it's still not there. It's still not there. So, I don't find any reason why I should be jumping the gun, especially given the fact that, it's a strong trend that we're talking about, both the dollar one and the risk asset one. So I don't find any reason why I should be fading these moves prematurely. If we do see a turn and we get all these confirmations, I think the dollar will squeeze, and I think there's going to be room for people to make money, even if they're not like in the trade since like the very, very, very beginning of it. So that's what I think about it. By the way, I saw somebody before that was asking about the nickel. And it is an interesting conversation. I was actually looking at nickel yesterday, and this is why it looks interesting to me, because we have a nice confluence of resistances up here. It's both this ascending channels, trendline resistance, and this potential triangle. If this is indeed a triangle, then you should expect another extension to the upside towards like 1436. But let's see, is it a triangle? Looks to be very well bid. There's no question about it. We break through this. I think we're extending higher and probably we're accelerating. Now, having to do with crude oil, look at crude. So far, it seems to have found support in the broken channels trend line resistance. So yeah, had a nice rejection day from 54, and it might just be consolidating here before it produces another low. But I think that the rest need to play ball as well. So, a lot of ifs and buts, a lot of potential for a reversal. But as I said, I don't see confirmation yet. What has definitively broken higher is Ethereum. You remember we talked yesterday about Bitcoin, and I said Ethereum seems to be the same way. It's in a triangle, which would imply another move higher. Look at Bitcoin not following yet. In this case, we might have Ethereum leading, right? Be careful though. This is the previous all-time high that you see here. Be careful, because if you remember, I said yesterday that if these are triangles, then the next push higher should be terminal, meaning should be followed by a much deeper correction, right? So be careful. Initially, I think that Bitcoin has a good chance of following Ethereum and making the equivalent move higher, but I would be looking for a reversal to follow rather soon after that. Now, other people want to know about palladium and platinum. Platinum remains bullish. Here it is, still consolidating above this bull flag. So I have nothing to add there. Palladium remains trapped in this longer term symmetrical triangle. So, nothing to see there yet. So nothing has really changed there. Natural gas, back testing this channel. Let's see if it can hold here. This is an important area of support, assuming that's the channel, because don't forget, I've said a million times, corrective formations are very, very hard to predict in advance. Many times you have to redraw and redraw and redraw. What remains to be the fact, though, is that I do believe that these lows there in natural gas, we're not going to see them again. I think that natural gas, eventually, if it isn't from here, we're going to see what kind of formation we have, is headed much higher. So I do strongly believe that.
Thank you, Steve.
Oh, top of the hour, right? Interview time. Okay.
Yep. All right. Great job as usual. Steve
Okay,
Volke,
Dale.
everybody, take a bow. Okay, nice bow.
Enjoy the interview.
Okay, thank you. Hello, Dana. Going to get you set up, buddy. Looking forward to talking to you in this new year, new era. Happy New Year, Dana. I know it's halfway, 2/3 through the month, but hoping you have a great year this year. How are you, buddy? Welcome back to Face.
Hold on. You got me now?
I got you now, buddy.
All right. Yeah. Happy New Year. Thanks for having me back, Dale. Always
Oh,
a
no
pleasure.
problem. And sorry about the typo
Oh,
on Twitter. Huh?
hey, I have a girl's name anyway, so it's just a different.
Oh, Dana Andrews was a man, and anyway. Look, you know what?
Dana Carvey.
Then we have that in common, okay?
Yeah.
Because my name's Dale,
Yeah.
and when I was a kid, everyone would go Dale Evans, Dale Evans. That was Roy Rogers and his
Yep,
wife Dale
yep,
Evans.
yep,
Anyway,
yep.
so
Excellent.
I'd overcompensate to be masculine because of that. Anyway, we'll get off the test stuff. Huh? What's that, Steve? It didn't work.
I just found found that funny.
Yeah. All right. So Dana, you want to share your screen? Green box, buddy.
Yeah, you got it. All right.
All right. So
We are up.
okay. So new year, same trend. Looking at the market, we had this little pullback. So far, that's all it was. I know a lot of guys are looking for about 3850 in the S&Ps. I mean, they're even bigger bullish targets. But there is now. It's not just about buying the market. You really have to have more awareness of sectors than you had to have before, didn't you, Dana? Don't you, Dana?
Yes and no. If you really want to outperform, yeah, but there's so many sectors that are working. I've never seen a better trade environment in my life. I mean, I've been at this game for, a long time, 2.5 decades and longer, watching my father's career, because he started in 68, 69. And he says the same thing. He said, this is the best trading environment he's ever witnessed in his life. So you got to make hay during this kind of environment, because I mean, what more can you ask for? You've got a broad rally, you've got broad participation, you got as soon as something gets extended, something else pops up and gives you an opportunity to roll those profits into new sectors. You've got opportunities galore in lots of asset classes. I mean, we usually average maybe like 10 or a dozen holdings at any time if we're long. For short, obviously, if we're defensive on the market, we might have no holdings. But if we're long, maybe we'll have a dozen. We've got like 3 times that. So
wow,
and we've never traded this many other asset classes. I know you guys are big into currencies. We're actually trading currencies, cryptocurrencies, metals, bonds, all kinds of stuff. So it's anywhere we can find opportunity, we're gonna jump on. So
So do you find it? Do you have something mechanical, Dana, to take in and out of the market, covering that, being in that many different positions? As a discretionary trader without any kind of mechanical help would be overwhelming to me.
Sure.
How do you guys do it?
Yeah, so we've got a top-down approach. So we have what they used to call a market timing model, or now active risk management, whatever you want to call it. So, like I mentioned, my father started in the late 60s. And if for anyone who is familiar with that environment, obviously the next 15 years or so was a secular bear
Sideways.
market. You saw sideways. You saw it was sideways. You look at the chart, you say, okay, it went sideways, but those were big moves. Those were, 50% drops and then 100% rally, and then you repeated the cycle. So,
Yeah, what was that range, Dana? About 600 to 1,000 in the Dow for all those years? Something like that?
Correct.
Yeah.
Something on that order.
Okay.
So, working for Merrill Lynch like he did, obviously they were no help in helping him actively manage his clients' money. So he came up with a risk management or a risk assessment model, which a lot of the components we use today, but a lot of it revolves around breadth. So what they say is 70 to 80% of the direction of a stock is because of the direction of the overall market. So we want to be aligned with the direction of the overall market, the broad market of stocks. So for our first order business, the quantitative model that tells us which way the overall market is headed. And if it's headed up, then we want to be aggressively positioned like it is now. And we want to take advantage of these up moves when we get it. And when it turns south, then we will get extremely defensive. We'll go all cash sometimes. We'll go short sometimes. But the point is, if the overall market is headed lower, you want to be protective of capital in those environments. So that is our main overriding model, and it's based again. First and foremost, we're equity managers, so it's mostly it's derived completely from inputs from the equity market itself. And from there, the second prong of our investment approach is where are we going to invest, right? So if you're long in the market, if the risk is conducive to be aggressively long, then where do you want to invest? And we espouse a relative strength approach. So we don't want to just spread out among all the sectors, because you're going to dilute your performance, because some things are going to be working, some things are going to not be working. But we like to concentrate our holdings in those areas that are working, which makes this environment, like we mentioned at the beginning, very unique, because there are so many areas that are working. So if we can diversify among a lot of high relative strength areas, that's best case scenario, like it has been for the last couple months. So that is basically the crux of our investment approach.
Yeah, so you have some fib extensions up there.
Yeah.
So
well, I'm going to go back. Last time we talked, I think it was election day, right? So we had, at the time, our model was wavering in September. We had that mini correction, but the beginning of October, we had a resurgence in breadth and the number of areas participating. So here's the mid-cap pure growth index, or ETF. RFG is the ETF ticker symbol. So at the time, we had a breakout. And this is representative of a lot of things. At the time, we had the breakout above the several years high, pulled back right at election day, or a couple of days before, came back, tested that breakout point, and which we talked about at the time. We said, what if this is just a test of that breakout point, and we jump higher from here? Which it couldn't have unfolded better. Now we're hitting in many of our holdings that we bought around that time, a couple months ago, we're hitting, say, the 161 extension now. So we take profits in these areas, look for other opportunities. You don't have to sell the whole thing, but look for other areas to roll in. And it was the same thing with the Russell 2000 growth.
That was amazing.
Same thing. Yeah. You had a couple, you had 2 years of similar highs. Broke out, came back down right just before election day, tested that breakout, and then straight up from there. So now we're seeing a whole bunch of other areas starting to step up.
I read a stat that penny stock volume has completely exploded to unprecedented levels, and we know that most of that's junk, right?
Oh yeah. We don't-
you know, bulletin board, pink sheet, stuff like that. But, you know, the little investor, the Robinhood, I mean, they could come in and buy 1,000, 2,000 shares. They can't do that with FANGs.
Right.
Are there any signs, Dana, that are saying that, I mean, isn't that a sign that things are a bit overdone when you're getting this kind of volume in, you know, dash to trash?
Definitely. And that is one thing that's probably the biggest red flag right now in the market is investor
Sentiment.
sentiment gotten way overheated. But you could say that, you could have said that for the last 4 to 6 weeks.
How about the
So,
last 10 years?
10, well, I mean,
You know, yeah,
in
I mean,
some
that's
ways,
what I was saying.
yeah, those background, what we call them background indicators, they're long-term signals like valuation, like the level of household investment, and those have been like at warning levels for, you know, for a long time. We call them the secular cycle. So though they reached all-time records in 2000, and this is one reason we've talked about this, why we don't think we're off to the races from on a long-term sustainable basis, because we had the secular top in 2000, and historically you've always gone to extremes to the downside before you reset and start a new sustainable secular bull market. And
So that
what
still applies even though we had that crash in March?
No, I think it does apply. And because we never saw those metrics correct to extremes on the downside like we saw to the upside. You know, we saw maybe during the financial crisis, we saw things maybe correct down to the long-term mean. And then you had the unprecedented central bank interventions that prevented natural correction in many of those metrics, economic and market-wise. You saw you didn't get that correction down to that long-term oversold levels like you always have historically. So that's still to come. And not only do you have some of those excesses still built up into the system like you had in 2000, but now you have even more excesses that have been built up, obviously, with that intervention since 2009. So you've got obviously prices to be paid since going back to 2000, and then since that 2009 financial crisis. So we don't think as great as this bull market has been, we don't think it's a sustainable one that keeps going. You're going to have a huge reset that takes those metrics down to levels where you can, you know, launch a sustainable, organic, secular bull market. And we don't think we're at that point. But in the intermediate term, things are great, and you have to take advantage of it. So,
okay, that's very interesting. So, you always have that in the background of your mind. And
sure.
What do you think? I mean, I know a lot of there are some bulls that think that we could stretch it into about 2023 and some 2025. Do you think that this bull has? I know it's a very difficult question. Has years to run?
You know, that's a tough question. I would have said, you could have asked me that over the last 10 years. I would say no, probably not.
See?
But you know, it depends. It depends on the intermediate term. You know, our model's designed to capture the intermediate term, which is like 2 to 6 months. So if it's doing well, we're going to have our clients' money in there and trying to capture those good times, or else guess what? They're going to fire us, and we're not going to have any assets if we're saying, okay, there's going to be this big correction, maybe retrace 61%, which would take us down to these, you know, 2015, 16 lows, or maybe down to those tops from 2000 and
1500, 1550.
Maybe it takes us down to there again, which would kind of validate that secular bear market thesis, because this would not be a sustainable move. You still come back and test. But while we're waiting for that to happen, if we're jumping, you know, close to whatever this bull market's going to end, it could be up, you know, 100% off of those March lows. We can't sit that out if we're managing money. So
no,
I could definitely see, you know, looking at that
4,000.
extension. You
Yeah.
could definitely see up over 4,100, 4,200 before this move is over. Especially given, again, we'll go back to what we place a lot of importance on the broad market, the market breadth, and we're seeing, an extremely broad advance. If I go to what we call this probably the most important index is that value line geometric composite, because it measures the median stock, the median, basically the performance of the median stock in the market. We've seen, a long sideways action, but that one is just now testing those highs from 2018. Could see some consolidation here, work off that excessive bullish sentiment, and maybe pull back for a little bit and then break out. If you look at, interesting enough, obviously the arithmetic index, which measures the average performance, is always a little bit ahead of the geometric, but you look at that, I mean, that exploded recently after the election. This is the average stock in the market. I mean, there's nothing remotely bearish about this. Yeah, it's getting extended, but after a reset, a pullback, consolidation, whatever, get people a little bit less bullish. There's no reason not to expect at least another extension of this rally. So I think you'll have, if you missed out, a lot of people missed out on a lot of this rally that just recently come back. If you're in that position, I would be probably not chasing anything here. Wait for better. I think you get a better opportunity over the next several weeks, month, whatever, and then get aggressive again for another extension.
Okay, Dana, you keep bringing up the word reset, and there's a lot of talk and financial twitch everywhere. The public's talking about the Great Reset. Well, do you have a concept of what they're talking about, the Great Reset? You ever look into what these people are thinking that could be?
I have no idea what you're talking about. I've seen
all right,
the
fine.
reset. I
okay.
talk about this COVID stuff being a great reset on pretty much broader areas of our life. But as far as financial wise, I don't know. But I will say, as far as the near term, given the sentiment extremes, and we're seeing, we've seen put the call levels and options data and other data that's been, extremely bullish, overly bullish for about 6 weeks now. We're seeing those go to even further levels. So I think we're seeing, this has been such a great run. It's going to take like extreme levels past those normal extreme levels to get that reset that I'm talking about in the short term, and kind of remove some of that bullishness that's pent up. Kind of like we saw right before the election. People got nervous about the election. If there's a disputed election, what's going to happen? And that proved to be just like the perfect buying opportunity that you needed. So you need something like this. I don't know what the catalyst will be. They always figure out the catalyst after it.
Reporters will tell us.
Exactly. But that'll happen. It'll be probably a very good buying opportunity.
Well, besides your bullish stance last time in equities, we were talking, you made a nice call on rates. 10-year finally broke out over that 1% level and made a nice move. We're pulling back here a bit. What are you seeing here now, Dana, for rates?
Yeah, you were all over this as well. So we had that consolidation. Our first target, quote unquote target. I mean, we take what the market gives us. We don't like to put necessarily targets, but that first level in the 10-year we're looking for was about 108. Get that we're above there a little. So I like this consolidation above here. The next target, the big target, would be about 150. We're looking at on the 10-year. So eventually, not a straight line. Eventually looking for that. And on the 30-year, we're short the 30-year. So we took some profits at 185, consolidated around there. If you're looking for the next level on the 30-year, I'd be looking up around 245 eventually. And then, as I think we've talked about it, there's about a 55 to 60 year cycle in interest rates, which topped obviously in the early 80s. It has been way overdue to bottom. So whether you want to ascribe that to the central bank intervention, whatever, it's been way overdue. So if we did, I would not be surprised if this March low was the bottom, the long-term bottom in rates. And we go up for years or decades to come. So obviously, again, not a straight up move, but if the hundreds of years of interest rate cycles are still valid, then that means we go up for several decades in rates.
Yeah, those levels we had in March, I think we haven't seen since the Civil War. That's
Right.
how extreme it was. So when do you think the market would feel pressure from rates? Would we have to see 3% longer term? Maybe that's the undoing eventually. Would be, we're not going into negative interest rates, and the surprise would be that the Fed is not eventually affected at
Right.
what do you think they think about? I mean, really, yields doubled. What do you think they're thinking?
Well, I'm thinking they're probably scared that, they don't have control of the long end. That's driven by the market as much as obviously they can have some influence on it, and they have for the last, 10 years, that last decade or so. But they don't have control over it. The market has control over that. And at some point, say we break above that 150 level, maybe in the 10-year, that starts putting pressure on. I don't know what point that is. And normally the good thing about our system, our approach, is it's all based on market data. I don't have to answer why. Isn't that nice? It's fun to pontificate.
You're right.
And, come up with narratives, but who cares? I mean, why are rates going up and stocks are going up? Why was why do sometimes the dollar and gold moves the same direction? And it's not, these relationships change. So we like to basically, we've got our overall models that we rely on, and they're quantitative, objective, and they're smarter than we are. So we don't have to figure out why things are moving. But then those relationships change as well, that intermarket analysis type stuff. So sometimes things don't make sense, but prices don't lie, as they say. So we rely on that first and foremost.
Okay. Well, something that has changed, and people still don't believe it, and it took a lot to convince me, has been the move in oil and WTI. And I think the shares have been lagging, but the price of oil itself, but they've kind of came to life the last couple months. In fact, I think 1 month, both the banks and the oils were the strength of the recent rally. And they were so out of favor, and people are kind of scarred from seeing crude, a commodity, trade at a negative number. What are you seeing here, buddy?
I'm seeing a long-term downtrend. But again, we go back to the intermediate term, and this is a GSCI crude oil index, so I don't have to worry about rollovers and adjustments and stuff. So this is what I track, and recently, just over the last maybe beginning of the year, broke out above some key resistance. So long term, I'm bearish on crude oil, but in the near term, broke out above some resistance, opens up further upside. It's the same thing if you talk about the CRB index, or this is a index we like, the equal weight commodity index. So it's not all crude. This one just jumped up above some key resistance as well. So still lower highs in the long term, but in the near term opens up further upside. And a lot of that has to do also
grains.
With grains. Exactly, you nailed it. Does the GSCI grain index jumped up above that long-term trading range, so that opens up further upside. So we do see in the intermediate term, see more upside in grains and some of the commodity stuff, and even crude oil, even if we're more bearish in the long term. And that does play into what you're talking about, the equity energy
along the world, bro.
Equities, and oil stocks and whatnot, which look terrible in the long term, but in the near term, intermediate term, I think there's lots of upside there. Here's the oil services
Right.
ETF OIH moved to new highs recently, so I think there's room to go in some of those oil stocks just on a mean reversion basis. So yeah, everything's working right
Yeah,
now.
I mean,
It's
yeah.
not, yeah.
Hey, metals, and we'll leave it there. Because, you know, we've been in some type of a corrective stage in metals. Wondering what you're thinking here.
Yep. We like metals in the long term. So this is basically our read on the metals is what gold had, that gold and silver. Gold, I'll touch on gold first. GLD we trade because we trade ETFs. So what did GLD? The long term, we scroll out. Long term, we had that huge rally into summer, right? Ran right up to those 2011 highs. Basically what we're seeing recently is, you know, consolidation, a little retracement, a reset again, to use that word again, ahead of what we think is going to be another up leg, a breakout and another up leg. Recently, as in Friday, broke down below some support on GLD. I'd like to see it get back above that 173 if it's going to hold. If it doesn't, maybe we'll pull back to 165 again, maybe even down around 158 for maybe an ideal entry point. And we're seeing that the same thing, a little bit different in silver, but seeing the same near-term setup there. So we like silver also. Hopefully it holds around this area. We'd like to see that, but we see big upside there. And even the gold and silver miners, especially you look at here's the silver junior miners ran into a
SILJ.
Yeah, SILJ
Yeah.
broke some support recently, but in the grand scheme of things, we see this as a nice consolidation above a breakout and a potential to run higher. Same thing with gold junior miners, GDXJ. This one approaching some resistance and or some support areas. And if you look at one more thing, yeah.
I just have a attendee question, and we'll wrap it with that.
Yeah, well, just real quick, GDX. So ran right up in last summer, right up to that 61 retracement from the 2011 high. So a perfect spot to consolidate, reset before the next up leg. So that's what we're seeing.
Ariel Harosh is interested in your view on nat gas. You have one?
Yeah, nat gas.
I mean, is there anything you don't cover?
No, pretty much, because we cover it every. we cover it every day for subscribers on our all access Lion Share. So I run through everything every day, all the key charts. So nat gas we see in a short-term pullback. We like it for maybe another run higher. So we had this nice rally right before the election, pulling back here. So this is a GSCI index again. So short term, it's in this little trading range. If we break above this 50-day, I think we could get another up leg in nat gas.
Okay. Thank you so much, Dane. How do people get access to your work, that letter that you just brought up?
Right.
I hope that helped, Ariel.
Yeah. Let me share a different screen here. So we've got, our main business is managing money, of course. Right. So let me share this screen. So that's a discretionary basis. We manage assets for. Is that working? Am I sharing? Yeah.
Yeah, you're sharing. It's on Zoom.
So our main business, managing money on a discretionary basis, but we also have a couple other services. The Lion's Share is a kind of a trader, premium trader type letter where we give basically an all access look every day at what we are doing in our own management business. So what are we looking at to buy, sell, key charts, and this is on an everyday basis. So you can see what we're actually doing. You pull the strings yourself, but we give you basically an inside lens to that. So that would be lionsharepro.com is the URL on that. But we also have, here are some other resources. We have a service geared towards 401k investors called My 401k Pro, kind of a slower kind of service. So it's updated once a month for people that don't want to make that many changes or can't because of the structure of their account. But those are basically what we offer on a service wise. And of course, you can follow us on Twitter, StockTwits, sign up for a free email here. So just go to lionsharepro.com and you can find all these resources. So
you're a talented pro, Dana Lyons.
Well, I appreciate Diana. Right.
Yeah, well, that's another life. Anyway, thank you so much, my trading warrior brother, for coming in and sharing these ultra unbelievable along the world views and everything, and also that you have your eye on the other corner just in case, and really appreciate your work. Much respect from me and our community. Thank you, Dana.
I appreciate. Thanks for having me on again, Dale. And it's always a pleasure. It's always fun talking to you. And Happy New Year to you and all your followers.
Okay, buddy. We'll get back together in April. How about that?
Sounds great.
All right, everyone.
All right, take care, Dale.
That's Dana Lyons, and check them out. And there's some different ways you could go, but I've seen Dana for a while. I've been talking to him for years, and he's very good at what he does. So that's a wrap, everyone, for Turnaround Tuesday. And we'll see everyone. His Twitter is right there in front of you, J Lyons Fund Management, Bruno. Okay. You're welcome, everyone. Don't just count your pips, count your blessings. See you tomorrow. Adios.